All right, it's great to be back. I know it's been a while since I did a YouTube video, and the reason was we were on vacation. We were in Turkey, then Greece and Rome. Great time. I left on the 4th of July, so I did miss the fireworks, but I came back for market fireworks, that's for sure, and this is awesome stuff. Just to go through, you could read this later. This is the last, at least positions that we had on Etsy. We've taken some heat on that trade. AT&T long from 16.5. Pfizer been long that stock forever. We'll address that today. 25.68. Comcast finally had a big move. 38.95 is our long. Biogen been long, got out of half. We raised our stops, and we're still okay with Biogen. It came close to getting stopped out. Cohu is in the semiconductor space, and we're up money. It pulled back today. I'll show you that. Gilead Science, another one that's made money for us. Fortinet is just a pain in the neck. It's just below our entry. Snowflake, want to add to this. We're making a little money, and unfortunately, I'm going to have to raise that price. Tesla, this trade is no longer in existence. We not just raised our stop here, but when we rallied while I was on vacation, I did send an email alert out, and we were flat that. I just didn't update the page that I'm showing with you. So the moral of the story is, and that's when you read the newsletter, this is what we're looking at, new trades. I'll explain that another day, but because there's just Beamer technology, this is one that we made just boatloads of money on. It's kind of a penny stock thing, but another day, another dollar. Let's get into what I have some questions on that I promised I would answer. First, the rotation and the Russell. What do we see going on with the Russell? The longer the sideways channel, the bigger the breakout. We had a good little buy signal in here. You can see the PPS on rising breadth. That's the 80 comp line. OBV, that's on balance volume. Volume started to lead prices higher. And this is the JP Mc oscillator. It's like the McClellan oscillator, but geared slightly modified for this particular instrument, which is the Russell. It's at an extreme overbought reading. However, I would not anticipate a significant pullback. Based on the breadth that participated in this and the volume, I think this is a real breakout. So what's the story? Bottom line, here's how I'm looking to trade it. I'm looking for a pullback. More likely, everyone thinks that it might pull back. If the market's truly bullish, if you look over here, when the market broke out, it broke out, but then the following week had a mild pullback. But in any of these pullbacks, we did not take out the lows of the week. So it may not be this week. It'll probably be more likely next week. And might get just a shallow pullback. And I'm thinking around 218 to 216, 218 range. Sorry about that. I wish I could be more precise, but that's what the ticket shows. Let's double check something here real quick. IWM, because I got a few ways you can, I'm looking to trade this. On a pullback, I'll watch to see if the volume is kind of light. And what we'll use is pivot support. I got support at 217.65. So let's start there. Bottom line, that's just pretty much near the highs that we had on Monday, right? So as long as we maintain the structural strength of the weekly open, meaning we don't go below and close below the open. The open for the week, you can clearly see, and makes it a little better on a weekly chart. As long as the market stays above that 214.79, I'm very happy with that. I'm looking to be a buyer or pullback, like I said, 216, 218 zone, and there's several ways to buy it. A, the IWM. B, look to buy, if it pulls back there, look to buy, not the August, jump out to September, because I think August is going to be kind of a difficult transition of the market, and we're going to need multiple weeks for upside gain. So I'm looking at, on a pullback to 218, buy the 225 September calls, spread it off, and sell the 235. Now look at that. That's a 222, 235. What are you talking here? 13 wide spread. So I can't price it out right this very second, but you can do your own homework. That's the spread I'm looking for. Another way to trade, if you want to be more in line with the daily percent move, TNA is the bullish ETF, and you could trade the bullish ETF. It will gain more, obviously, being a leveraged ETF, than the underlying IWM, and it certainly is priced different. I mean, this is a $47 instrument instead of around 200. For lower capitalized accounts, I would recommend going with TNA. And what's the risk factor? You don't want to see the market get back underneath the weekly low, which in this case is 42.56 to be exact, 42.84, excuse me. So TNA on a pullback, you know what your risk is. What's the upside objective? I would not really, I mean, first and foremost, TNA hasn't really quite broken out of the sideways range. So the first course of action is going to be testing this high at 54. Second course is going to be testing this area consolidation, these moving averages over here, which is around 60, the round number. And that's kind of what I think we're going to see out of TNA. So there's several ways to trade it. The IWM, the TNA, leveraged ETF, and again, an option go out to September. And that's what we're looking at there. Today we had heavy volume, not just in some of the energy stocks. Valero, as you can see here, we did 5 million shares today. Normally it does 2.6 million. It wasn't a great showing, but there was a lot of, it formed a doji. So there was heavy selling at the high and buying at the low, and the market settled right back. That's indecision, not a fan. Out of the energy complex, I think that Conoco, COP, is one that we can manage risk the best with. Is it a high beta name? Meaning, will it just explode like a highly leveraged, volatile name, such as maybe a Schlumberger? No, but we can manage the risk. At the end of the week, we're going to generate a person's PPS buy signal. Should we get in it now or wait for the official buy signal? Personally, I think you can probably look at any pullback to be a buyer because I can manage the risk. Buyer at around 114 and change, 69 in this case. Risk underneath the pivot in the moving average, 111.84. Another way to play this is going out to, again, bypass August expiration, go into September. You're going to have, again, driving season, kids going back to school. Still, you got that late summer travel. I'm not saying that geopolitical issues have gone away in the Middle East, but, you know, there's always that element out there. But it's hurricane season, one threat of a hurricane, and we see a shutdown in production in our rigs and oil refinery, then this thing's going to fly. These guys will make some money. Longer term, I'm just looking for a seasonal trade here. I'm not talking about what's going to happen with the presidential election and the different policies, but I'm just talking about right now, we're looking for a momentum trade to the upside. People have been building, institutions started to build back into this position here. Conoco, COP, to me, looks only because I can manage the risk a little better. And I like this double bottom pattern here that you see on the charts and the improvement of relative strength. And it does have some decent appreciative volume accumulation, showing that someone else other than John Person likes the trade, right? The other sectors is Halliburton in the oil services. And as I mentioned, Schlumberger, both on heavy volume, bigger than normal. They've already had big moves. So, I mean, I'm not going to put out a trade rec if you're not in it. Don't be in it right this second. I could tell you to buy it at 47.5. That might just be, you know, hot air. But if it did get, it's got, look at the same kind of double bottom pattern. It's got this little basing action I like, and the volume looks pretty good. I like Schlumberger. Let's take a look at Halliburton. Halliburton looks a little bit with more of a double bottom pattern. It's definitely at resistance, so it's more likely to pull back next week. Where, let's go with, well, we can't figure out where the week's ended yet, so we don't have next week's pivots in line for us. But I would certainly, I wouldn't rule out a move back to 35. A dollar pullback would be easy in this market on Halliburton. You don't want to be in this trade if it gives it all the way back to 33.5, and that's Halliburton. All right, let's get into some heavy duty stuff. Let's first talk about, before heavy duty stuff, here's Target. Target, shoulder, head, shoulder on a monthly chart, needs some more filling in the work. So filling in the work, long shadows on a monthly basis. We're currently above the open on the month. Volume started to improve. It's sold off hard and heavy. It's been down in a downtrend. Last week was weekly buy. We're late to tell you about it while I was on vacation, but now we got some upside potential. Heavy retail sales improved. I don't think all the discounters in the supermarkets are in, and again, Target and the department stores are going out of business this week. But I think Target got it's time to look at a trade in Target. Earnings on Target, if I'm not mistaken, I believe July 26th. So we could look at something like buy Target at 153.69, 153. Got to get a pullback there. I'm not going to buy a breakout in this market. 153.69, somewhere near the pivot from today in this old high, a little small little nibble pullback. Lower opens and lead to higher closes. So if it opens lower, trades higher, that's a great sign. So we look for a little dip, 153.69, stop 147.10, or option traders, smaller account size guys. Here's what we want to do, people. Look at the July 26 expiration. You don't have to go out that far because I'm looking for an immediate move, a small pullback and an immediate upside. July 26 option expiration, the 157.5, so that's not far out of the money. Sell against it, the 165, and try to do that spread for $1.50 exactly. Again, it's the 157.5 strike call. Go long, sell against it to collect a little premium to offset your cost basis at 165 strike. So you're in pretty much a 7.5 wide spread for $1.50. Your risk is half the premium. We go into like middle of next week or if we don't see any positive performance by Friday, if we're not closing greater than we are currently, if you do have a chance to get in, get out. That's just that simple risk management. So I just want to make sure that we're clear. We don't just buy an option and try not to let it expire worthless. But I do think that there's going to be something down the pike, and maybe there's going to be a little upside momentum, maybe sympathy from a like-kind company with earnings, and maybe early analysts upgrades. Something can happen, but it does look more positive at this point going forward. Today we had a disaster on a company called Five and Below, or I don't know if that's where the stock's going, $5, below $5. But Five and Below is a general merchandiser like Dollar Tree, Dollar General, etc. The CEO's out and they lowered their guidance on sales. The stock was only down 25%, man. It just not on bad earnings, just on we're getting rid of the CEO. I mean, you would think that would be a good thing because they haven't been able to make any turnaround in the market. I think that's just from a trader's perspective. It blew through support. Volume today was kind of heavy, but my indicators, to be truthful, they're a little oversold. So I wouldn't rule out a lower open tomorrow or maybe around 73, 74, a dead cat bounce back up to 82. So if you're looking for a quick dead cat bounce, Five and Below might be that in that game. Let's talk about the big boys now. AMD. Big weekly engulfing pattern, but I'm a little slightly on the bull side on the AMD. I don't think the AI, artificial intelligence story went away. I think this market segment just got a little over ahead of itself. I think pullbacks, or at least if this is a wild trading range, 144 again wouldn't be out of the realm of reality. First stop, 152. Break 152, 144. Keep those numbers in mind. NVIDIA, the granddaddy, the biggest, baddest boy of them all, going to be in a weekly sell. But that's great because if it gets in a weekly sell, that means the SPY goes down, that means the Qs go down, and a few other names go down, and I'm going to be in a buyer. Here's some spots that I'm looking at for NVIDIA. First off, 110. I got support right around, 110.10, RIN10.10, 110.10, right there. There's the green line. That's a person's pivot support. It also intersects a close around May 31st, the end of the month close, a monthly close right down there. If that level doesn't hold, then you're talking the gap area. There's a small gap. Let's double check on the charts. Everyone will probably see this and, be talking about waiting for the gap. If everyone sees the gap right here, it's big enough to run a semi-trailer through. That was a breakaway gap of epic proportion. Old high, here it is. It gapped through it and just took off. This is a common gap. It filled that. A lot of people will be eyeing to buy that down there. My 2 cents is if everyone sees it, it probably isn't going to come to fruition at this point in time. So 110, 111, something like that. This is where we had the consolidation. The market had the white line in the sand as the last conditional change support. That's around 109.5. So I'm rounding up and saying 110. Besides, we have a higher time frame pivot support at 110.10. Will it get there? I'm not sure. Because, but I can tell you if it does get down there and we have a nice intraday 5-minute buy signal, I'm a buyer all day long. It's going to take a lot to get down there, we're going to need another day like today, another 6% or 7% move to get down there for some action on NVIDIA. We got Meta with another big move to the downside. My 2 cents is we should have seen a dead cat bounce here up to around 175 to 182. Fill that gap, and then we'll see if we get another leg lower. Personally, I think that Meta's on its way to at least testing 430 area one more time, if not maybe 420. A lot of long shadows up in here, but before something crashes and just caves in, just let me point out, it was a little overbought at 545 and it's already dropped. Somebody's going to probably want to buy a little on the dip. And considering the fact that it's right into rising monthly moving averages, somebody's going to probably have a little support to buy into there. So if you're looking for a little day trade action, we could look at Meta from there. Overall, the market, myself, personally, I think the Qs are going to come in a little bit more. And when I say come in a little bit more, let's expand this chart for you. My 2 cents is that we come and the gap down here at 470, 11 handles. I think that's where we come into. That makes, it's in a daily PPS sell. So it's hard for me to say, gee, buy it today, tomorrow. But my guess is based on some measuring objectives and some pivot analysis and other work, the big support will come in right around at 470, 469. As for the S&Ps, if the Qs go down, odds are SPY goes down. Where's the SPY going to go? If there is more follow through, relative weakness, there's a 538 gap, and that particular gap on June 12th, I mean, we're talking a month ago, would not be uncommon if there is going to be any kind of a more unwinding or a bloodletting, so to speak, in the mega caps, which has led this rally and this voracious gain that we've seen in the S&P. So if we see more unwinding or profit liquidating in Meta, if we see, Meta gets a dead cat bounce, $6, $7, $8, watch out, more downside. Apple, by the way, formed a little daily low close doji. So just to get into wrapping this up, just be careful so that you know what's going on. AAPL, I know what the symbol is. Apple formed a daily PPS sell signal. It's a little on the expensive side. We avoided it. It hit a quarterly pivot resistance. Apple might have less decline than Meta or less decline than maybe Amazon. And I'll go through some of the other names like Tesla later. We were long Tesla. I sent an email alert out. We got out of Tesla. And while on vacation, I don't know, something else came out, some report, and it kept going. And that's all right. We had a great trade. I don't know many people that were long, that I was giving you guys Tesla a long time ago on these videos at buying it at 182. So I think a lot of people may have bought it. I didn't buy the low and I didn't sell the high, but I got a damn good chunk of the middle out of it. And that's what we're looking to do. So how would I trade Tesla going forward? I think Tesla's got a little bit more downside in 227 to 236. And before earnings, we might see that. I'm not buying a breakout here. I'm not a big fan of the tamer volume that I would like to not see. And I think just overall, if a fund or somebody is mega long stuff and they're starting to see some pressure and they're forced to get out of Tesla, then they're going to get just a margin call kind of sell-off liquidation, or, gee, let's just sell first and ask questions later. And that might just be a self-fulfilling correction in the market that might give the SPY maybe another 3 to 5% downside over time. And this is not going to be overnight. A correction in this market, you don't kill bull markets in one trade day. You go up and down and up and down, and it rotates and it grinds and it's frustrating. So don't be patient. Remember, keep your cool, fool. Don't buy highs. Don't buy breakouts a lot in this market. Buy pullbacks. Buy on your terms and use effective risk management. That's all I got. I hope you enjoyed that. I hope that helps. And if you like the analysis and the quick rundowns that we're doing, again, thumbs up or give a comment what you'd like to see, what you'd not like to see, and we'll move forward and try to improve it. Be good, everyone. See you in the next report.